The standard Medicare Part B premium crossed $200 a month for the first time in history in January of 2026, $202.90. And every retiree enrolled in Medicare Part B is now paying it or having it deducted from their Social Security check before the deposit ever reaches their bank account. Most of them do not know what happened, not because they are not paying attention, because Medicare premium changes are announced in November, published in government documents almost nobody reads, and deducted silently from a benefit payment that most retirees check for the total amount, not the line items. And the premium crossing $200 for the first time is not the part I want you to focus on. The part I want you to focus on is what is sitting behind it. The Part B deductible also increased. The Part A hospital deductible increased. The Part D prescription drug premium increased. And for retirees above certain income thresholds, the IRMAA surcharge that sits on top of the standard premium increased again. When you add every Medicare cost increase that went into effect in January of 2026 on top of the others, the total annual Medicare cost for the average retiree went up by more than $300 this year. For a retiree subject to the first IRMAA tier, it went up by more than $900. For a retiree at the highest IRMAA tier, the total Medicare cost increase in a single year exceeded $2,000. And here is the number that the Center for Retirement Research at Boston College published in January of 2026 that I want every retiree to understand. Medicare. Part B premiums, as a share of the average Social Security retirement benefit, have reached an all-time high in 2026, 9.4%. Nearly 1 out of every $10 of the average Social Security check now goes directly to Medicare before it ever reaches the retiree's bank account. And the trajectory of that number over the last 20 years is a straight line going up. In the next 20 minutes, I'm going to show you exactly what every Medicare cost increase in 2026 actually means in dollars, exactly how the silent deduction process hides the real cost from the people paying it, exactly which retirees are being hit hardest and why, and the 5 moves that can legally reduce what you pay for Medicare coverage without reducing the coverage itself. And then I'm going to give you 3 bonus moves at the end for the retiree who is subject to the IRMAA surcharge, because those 3 moves can reduce or eliminate a surcharge that in some cases costs more per year than a car payment. But first, I want to tell you about a client of mine. I'm going to call her Sylvia. Sylvia is 68 years old. She lives outside of Charlotte, North Carolina. She spent 24 years as a registered nurse at a regional hospital before she retired at 66. She collects Social Security. She has a small pension from the hospital. She is careful with money, keeps a detailed budget, and reviews her bank statements every single month. Sylvia called me in February of this year because something in her numbers was not adding up. Her Social Security deposit in January was smaller than she had budgeted for. She had received her COLA notice in December. She knew her benefit was going up by 2.8%. She had updated her budget to reflect the increase. But the actual deposit was $17.90 less than she had calculated. Sylvia is a nurse. She's not careless with numbers. She had simply not seen the Medicare Part B premium announcement in November. She did not know the premium had increased by $17.90 per month. She did not know the annual deductible had gone from $257 to $283. She did not know that her net Social Security increase, after the Medicare deduction, was approximately $38 per month, not $56. She had budgeted for $56 of additional monthly income. She received $38. The gap was not large enough to create an immediate crisis, but multiplied across 12 months, the gap between what Sylvia expected and what she received was $216. $216 that left her budget short in ways she spent 2 months trying to identify before she called me. Sylvia is not a careless person. She's a precise person who had incomplete information. And the incomplete information was not her fault. It was the result of a system that announces benefit increases prominently and announces premium increases in documents that receive a fraction of the same attention. My name is Marcus Steele. I am an enrolled agent licensed by the federal government to represent taxpayers directly in front of the Internal Revenue Service. I work with retirees every week on Medicare costs, Social Security coordination, and the tax strategies that reduce the effective cost of retirement health care. And the single most expensive pattern I see year after year is not a complicated financial mistake. It is retirees budgeting for the number they heard and not accounting for the number they did not hear. The COLA makes the news. The Medicare increase makes the fine print. And the gap between those two numbers comes out of your bank account every month. Let me walk you through every Medicare cost increase in 2026 because most people have only heard about one of them. The Part B premium increase is the one that got the most attention. The standard monthly premium went from $185 to $202.90, a 9.7% increase. the largest percentage increase since 2022. For a retiree receiving Social Security, this premium is deducted from the benefit before deposit. You do not write a check, you do not make a payment, the money is simply not there when the deposit arrives, which is exactly why most retirees do not notice it as quickly as they would notice a bill arriving in the mail. The Part B deductible increase received almost no news coverage, but it cost every Medicare beneficiary real money. The annual Part B deductible went from $257 to $283, $26 more before Medicare pays a single cent on your covered services. If you see a doctor multiple times early in the year, that deductible hits in January or February. It is not a large number in isolation, but it is a number that went up by 10% in a single year, and that most retirees did not know had changed. The Part A hospital deductible increased to $1,736 per benefit period in 2026. That is $60 more than 2025. A benefit period begins when you are admitted to a hospital and ends when you have been out of the hospital and not in a skilled nursing facility for 60 consecutive days. There is no cap on the number of benefit periods. A retiree who is hospitalized twice in a year with more than 60 days between stays pays the Part A deductible twice, at $1,736 each time. The Part D prescription drug premium also increased. The average base monthly premium for standard Part D coverage went from $36.78 to $38.99. For retirees enrolled in Part D and subject to the IRMAA income adjustment, additional surcharges ranging from $14.50 to $91 per month were added on top of the plan premium. Now, let me add all of that up in real numbers for both groups of retirees, because the total picture looks very different depending on your income. For a lower-income retiree not subject to IRMAA, the total Medicare cost increase in 2026 is approximately $333 annually. That is the Part B premium increase of $214.80 for the full year, the Part B deductible increase of $26, the Part A deductible increase of $60 on one hospitalization, and the Part D base premium increase of $26.40, $333 out of a fixed income that increased by a COLA that was never designed to keep pace with healthcare inflation. For comfortable retirees subject to the first IRMAA tier, the picture is considerably worse. The first IRMAA tier in 2026 adds approximately $74 per month per person to the standard Part B premium. For a married couple both subject to the first tier, that is $148 per month in surcharges, or $1,776 per year before accounting for the base premium increase. Add the base premium increase, the deductible increases, and the Part D surcharge, and the total Medicare cost increase for a couple at the first IRMAA tier in 2026 exceeds $2,500 for the year, from one year to the next, with no change in coverage, no added benefit. Just a higher cost for the same insurance they had in 2025. And here is what makes this worse for every retiree, regardless of income level. Medicare cost growth is not tracking Social Security COLA growth. It has not been for years. The average Social Security COLA over the last decade is approximately 2.6%. The average Medicare Part B premium increase over the same period is approximately 5.8%, more than twice as fast, which means the share of Social Security income consumed by Medicare costs grows every year. It grew in 2026. It will grow in 2027. And the retiree who does not actively manage their Medicare costs is watching a larger and larger percentage of their benefit disappear before they ever see it. Now, let me tell you the 5 moves that reduce what you pay for Medicare without reducing your coverage, because this is the part most people never get to. Move number 1 is to verify your IRMAA tier and confirm the income it is based on. Medicare uses your tax return from 2 years ago to set your Part B and Part D premiums. For 2026, Medicare is looking at your 2024 tax return. If your income in 2024 was above $106,000 as a single filer or $212,000 as a married couple, you are paying an IRMAA surcharge in 2026 based on that 2024 income. If your income has fallen significantly since 2024 because you retired, because a spouse passed away, because a one-time income event occurred that will not repeat, the SSA 44 form allows you to request a recalculation based on your current income. I covered this form in detail in a previous video. It is free, it is available at ssa.gov, and filing it with proper documentation can eliminate your IRMAA surcharge entirely or move you to a lower tier. For a couple at the first tier, that is over $1,700 per year back in their pocket. For a couple at a higher tier, the savings can exceed $5,000 annually. Move number 2 is to review your Medicare Savings Program eligibility. The Medicare Savings Program is a Medicaid-funded benefit that pays some or all of your Medicare premiums for you. There are 4 levels of assistance. The Qualified Medicare Beneficiary Program pays your Part B premium, your Part A premium if applicable, your deductibles, and your coinsurance entirely. The Specified Low-Income Medicare Beneficiary Program pays your Part B premium. The Qualifying Individual Program also pays your Part B premium. The Qualified Disabled Working Individual Program covers Part A premiums for certain disabled individuals who have returned to work. The income thresholds for these programs are higher than most retirees realize, and asset tests were eliminated at the federal level in 2023. For the Qualified Medicare Beneficiary Program, a single person with monthly income at or below approximately $1,260 qualifies for full premium, deductible, and coinsurance assistance. For the Specified Low-Income Medicare Beneficiary Program, a single person with income up to approximately $1,470 qualifies for Part B premium assistance. If you are paying Medicare premiums out of a fixed income that falls in these ranges, a single phone call to your state Medicaid office to ask about Medicare Savings Program enrollment could eliminate your Part B premium entirely. At $202.90 per month in 2026, that is $2,434.80 per year in premiums you would no longer pay. Move number 3 is to verify your Part D plan enrollment every year during open enrollment. Medicare Part D. Open enrollment runs from October 15th through December 7th every year. During this window, you can switch Part D plans without penalty. The plans available in your area change every year. The formularies, the lists of covered drugs change every year. The premiums change every year. A retiree who enrolled in a Part D plan 3 years ago and has never reviewed it may be paying a higher premium than necessary for a formulary that no longer covers all of their medications at the lowest cost tiers. The Medicare Plan Finder tool at Medicare.gov allows you to enter your specific medications and compare every Part D plan available in your zip code based on your actual drug list. The comparison takes about 20 minutes. In many cases, switching to a different plan during open enrollment saves retirees between $200 and $800 per year in premium and out-of-pocket drug costs. The coverage starts January 1st of the following year. There is no gap. There is no penalty. You simply move to the plan that costs you less for the same or better coverage of your medications. Move number 4 is to apply for extra help, if your income qualifies. Extra Help is a federal program that eliminates the Part D deductible and reduces prescription drug copayments to between $1 and $4 per prescription for qualifying low-income Medicare beneficiaries. The income limit for full Extra Help in 2026 is approximately $22,300 for a single person and $30,000 for a married couple. Asset limits are more generous than most people assume. For a retiree taking multiple prescription medications, eliminating the Part D deductible and reducing co-payments to a few dollars per prescription can save between $1,500 and $4,000 per year or more on drug costs alone. The application is available at ssa.gov or by calling 1-800-772-1213. If you are already enrolled in any level of the Medicare Savings Program, you are automatically enrolled in Extra Help without a separate application. Move number 5 is to use your annual wellness visit. Every Medicare beneficiary is entitled to 1 free annual wellness visit per year. Not a copay, not a deductible. Free. This is a preventive visit where your doctor reviews your health history, updates your list of current medications and dosages, and creates or updates a personalized prevention plan. It is completely separate from a regular office visit, and it does not count toward your Part B deductible. I include this because one of the most consistent ways retirees overpay for health care is by missing preventive services that are already covered under Medicare at no cost, and then paying out of pocket for conditions that preventive screening would have caught earlier at a lower cost. The annual wellness visit is the most important of those free services. If you have not used yours this year, call your doctor and schedule it. It costs you nothing, and it creates a documented health baseline that informs every other healthcare decision you make. Now let me give you the 3 bonus moves for the retiree who is subject to the IRMAA surcharge, because this is where the largest dollar savings are available, and this is the group that almost no content creator addresses clearly. Bonus move number 1 is the Roth conversion strategy to reduce future IRMAA exposure. IRMAA is calculated based on your modified adjusted gross income from 2 years ago. Every dollar of income that does not appear in your MAGI is a dollar that does not push you toward or over an IRMAA threshold. Roth IRA distributions are not included in MAGI, which means a retiree who converts a portion of their traditional IRA to a Roth IRA in the low-income years between retirement and when required minimum distributions begin is reducing the future MAGI that will determine their Medicare premium 2 years from now. The conversion is taxable in the year it happens. That is the cost. But each dollar converted out of the traditional IRA is a dollar that will never appear in the MAGI calculation that determines your IRMAA tier in future years. Done carefully over 5 to 7 years, staying below the first IRMAA threshold in each conversion year, this strategy can reduce a retiree's Medicare premium permanently and significantly from the year required minimum distributions would have pushed them into surcharge territory. Bonus move number 2 is the qualified charitable distribution to reduce MAGI below an IRMAA threshold. If you are 70 and a half or older, give to charity, and have money in a traditional IRA, the qualified charitable distribution sends money directly from your IRA to a qualifying charity and excludes that amount from your MAGI entirely. For a retiree whose income sits just above an IRMAA threshold, routing charitable giving through a QCD rather than writing a check from a bank account can pull their MAGI below the threshold and eliminate or reduce the surcharge entirely. The math can be striking. A retiree at the first IRMAA tier, paying an extra $74 per month in Part B surcharges, who gives $8,000 a year to charity, roots that giving through a qualified charitable distribution, and whose MAGI drops below the threshold as a result, saves $888 per year in Medicare surcharges, from the same charitable giving to the same causes. The only change is which account the donation comes from. Bonus move number 3 is the IRMAA cliff awareness strategy, which is the move that prevents accidental surcharge triggers from financial decisions that seem unrelated to Medicare. Every dollar that pushes your MAGI above an IRMAA threshold has a disproportionate cost. If your income is $500 below the first threshold, a single IRA withdrawal of $1,000 for a home repair puts you $500 above the threshold and triggers a surcharge of $888 per year for 2 years. A $1,000 withdrawal costs you $1,776 in additional Medicare premiums over 2 years, in addition to the income tax on the withdrawal itself. That is not hypothetical. That is the IRMAA cliff, and it catches retirees who make financial decisions without knowing where the thresholds are. In 2026, the first IRMAA threshold for a single filer is $106,000 in MAGI. For a married couple, it is $212,000. Know those numbers. Before you take an IRA withdrawal, before you realize a capital gain, before you make any financial decision that increases your MAGI meaningfully, check where you stand relative to the nearest threshold. A decision made with that number in front of you is a different decision than one made without it. Let me bring this together with the one idea that connects every move I described today. Medicare costs are growing faster than Social Security benefits. That gap has been growing for years, and the data shows no sign of it reversing. The retiree who does not actively manage their Medicare costs is watching an increasing percentage of their retirement income disappear before they ever see it. Not through any mistake, not through any fraud. Through a system that deducts costs before the deposit arrives and announces those costs in documents that receive a fraction of the attention given to benefit increases. Managing Medicare costs is not complicated. It is not available only to the wealthy. It is available to any retiree who knows what the programs are, what the thresholds are, and what forms exist to reduce what they owe. You now know those things. Every move I described today is real, documented, and available to act on right now. Before I close, I want to give you something to take with you. I put together a free checklist, my 2026 Medicare Cost Reduction Checklist. It covers every Medicare cost increase in 2026 with the specific dollar amounts, the SSA 44 IRMAA appeal process step by step, the Medicare Savings Program income thresholds for all 4 levels, the extra help application instructions, the Medicare Plan Finder comparison tool walkthrough, the annual wellness visit scheduling reminder, and the 3 bonus moves with the specific IRMAA thresholds and the QCD rules. Every item includes the form, the phone number, and exactly what to do. To get it, go to marcusgravestacks.com/checklist. The link is also in the description below. Print it out, review it before the October 15th open enrollment window because that is when your Part D plan decision has to happen. And review the IRMAA section before the end of this tax year because the income decisions you make before December 31st determine your Medicare premium 2 years from now. Here's what I want to leave you with. Sylvia found the $17.90. She updated her budget. She reviewed her IRMAA status and confirmed she was not subject to a surcharge. She scheduled her annual wellness visit. She reviewed her Part D plan during open enrollment and switched to a plan that covered her 3 maintenance medications at lower copayments, saving her $240 over the course of the year. None of that recovered the COLA increase that the Medicare deduction absorbed. That money is gone, but everything going forward is managed. She knows the numbers now. She knows what Medicare costs, what it is going to cost, and what moves are available to reduce it. And the gap between what she expected and what she received is a gap that will not catch her by surprise again. That is the whole difference. Not luck, not wealth, not a complicated financial strategy. Just the numbers, clearly explained before the deposit arrives rather than after. Send this video to one person you know who is on Medicare. A parent, a neighbor, a friend. The COLA that landed in their account in January was smaller than the notice said it would be. Most of them do not know why, and most of them have never heard of a single one of the 5 moves that could reduce what they are paying. One share from you today could put real money back in their budget this year. That is what this channel is here to do.